Alright, guys. So, algorithmic trading using ICT concepts. In this video, we're going to be looking at fair value gaps and a rehash of Power 3 and then just time-based trading in general. When you understand that these markets are ran off of an algorithm, and if you're familiar with any kind of coding or computer science, you know that as software developers, when you're coding, you're writing these scripts, everything is essentially ran off of functions, and in those functions, typically the most widely used things are, loops, but more importantly, in an instance of trading, it'll be if then statements. If I see a certain PD array and price action, then price should do this, and so on and so on. And so that's what we're going to be covering tonight. Basically, once you submit to understanding getting rid of these indicators, volume profile, stochastics, whatever the heck you want to use as your religion in trading, when you understand that these markets are booked and just ran completely on an algorithm, which you can't deny, all you need is what you see on the candlesticks in price. You don't need anything else. Alright, so with that, let's hop right into this thing. So we're going to start on our daily chart. So this isn't going to be an entire market review. This is going to be focused mostly on Friday's trading. So last video, like I said, I was focused mostly on seeing if the consequent encroachment or midpoint of this area would be broken, and then also mean threshold of this candle here. So with that, what we have, clearly we just break through and run through all of those levels. No respect. I said if, especially if mean threshold of this was not respected, broken through, my eyes were to these lows, and then of course the midpoint of this daily fair value gap. So that begins our first topic of fair value gaps. It's a pretty widely taught PD array out of all of ICT concepts, but I'm just going to go through a basic rundown of what is a fair value gap. So essentially, a fair value gap, it is not a liquidity void. A liquidity void is actually the absence of any kind of price action at all, or price booked. So you can almost think of a liquidity void as this area here, although with this wick it kind of makes it more of a volume imbalance, where a volume imbalance is something like this, where price is only covered in with the wicks. There's no bodies in there, just the wicks. Okay, so going back, this fair value gap right here. Okay, so what makes this fair value gap? It's a 3 candle pattern. Okay, so from 1, 2, and 3, where there is no overlap of wicks or bodies, it just leaves a patch in price. That is your fair value gap. And more specifically, it is a buy side imbalance. Okay, there is this big run up, this huge up close candle, and there's a sell side imbalance in here. So obviously the algorithm runs to either run liquidity or to rebalance inefficiencies in the marketplace. This would be a buy side imbalance. Like I stated in the last video, for me, at least personally, I am looking at fair value gaps in quadrants, especially on the higher time frames like the daily chart or a weekly chart or even a 1 hour, 4 hour, which most of the time I don't look too much at the 4 hour. 1 hour is mostly all that I need, and the daily, of course, and weekly. But I'm looking at this in quadrants, but more specifically, the main things I'm focused on are the 25% or the first quadrant, which I don't have labeled here, but it would essentially be, from this high here to the midpoint there. That would be your 25%. Then, of course, your 50% or consequent encroachment. Those are going to be the most important to me when I'm looking at price. But obviously, we can see all on the daily chart for the NASDAQ, all in this consolidation. We essentially just kind of, we stayed in the upper portion of it. And that's what made me essentially think that maybe price could be bullish. But obviously, if you have a certain bias or narrative in your head, you have to be able to just adapt, realize what's happening in price. Obviously, if you just have this huge rundown in price, don't look for buying opportunities. Realize what the market is doing. It's going short. Don't try to force long entries, although you can find some retracements in there that you can make money on. But go with the flow, man. All right. So we have this rundown into all week, into the consequent encroachment in the high end or the first quadrant of this daily BISI, buy side imbalance, sell side inefficiency. Okay. So again, this is a fair value gap. It's a 3-candle pattern. This candle's high, this candle's low. That gap in price where there is only one side of the marketplace delivery, which is buy side delivery, that creates a buy side imbalance. Okay. So let's drop into the 1 hour, and you can see here on the 1 hour we have another fair value gap here. So this candle's low, this candle's high. We trade up into it, and then we just fall down. Okay. We drop back down into that daily imbalance labeled in blue, that blue hue, and then of course that midpoint, that is our consequent encroachment or 50% level of that imbalance. All right. The next thing that I kind of want to bring up, because of fair value gap, obviously we have our bearish fair value gaps and we have our bullish fair value gaps. Obviously in black, whenever price is going down into the sell side and it has a fair value gap form, that is going to be our bearish fair value gap. Of course, if it's in green, that's going to be your bullish fair value gap. All right. So bearish fair value gap, it trades up into here, and then of course we go down. What I want to try to push, and when you see this action in price, it's kind of going to be like second nature. But essentially, whenever we have in price where we have a fair value gap here or buy side imbalance, and then price immediately just runs through it and doesn't respect it at all, I am looking at that as a potential, more than likely not potential, but I'm looking at it as a inversion level. So price ran through it, didn't respect it. I'm looking at that as an inversion level for price to come back into, and it's not going to want to push up through that. So of course the fair value gap will be your entry on the bearish side, but I'm looking at this green candle here that has the high and the low of that candle, the separation there. I'm looking at this as an inversion level. So when we drop down into the 15-minute chart, okay, we have here again this level here. Oh, sorry about that. So we have this level here. We have another fair value gap on the 15-minute chart, and then also I've added the midnight open. Okay, so the midnight open for using New York Standard Time, that is going to be your barometer for the power of 3. Okay, so power of 3, if you are bullish, you are going to be looking to buy under the midnight open or at the midnight open, and you're going to see essentially a protraction move under that midnight open to get to some kind of inefficiency, some kind of liquidity. And then you want to see, just like on the daily candle, like we go back here. So this down close candle, we'll use this one here. So price opens, rallies up, and then we take out some kind of liquidity here, and then we come down, 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 down all throughout the day, and then we get to some point in price, and then price retraces for the day. Okay, so essentially the same thing that happens every single day. We open here for a bullish day, we come down, and then we go up, and then we have a small retracement from the high day. Okay, so that is power 3. So let's go back down to the 15-minute, and right here, of course, we see that bearish fair value gap, midnight open. Midnight open, we come down. You don't look at this so much as a projectionary move. It's just kind of a la-di-da-di-da-di, not really doing anything. If it were a wider range like this, of course, this projection move up or expansion move up. So we drop down and then we come up. It's a larger range, more prominent, and then we trade into that 15-minute bit SIBI, sell side imbalance, buy side inefficiency. We have to have buy side delivery here, but of course these candles, you see, they respect the midpoint or consequent encroachment. 50% of that level hits it here, and crumbles down. And then of course we're looking to sell, hold our sell into under the midnight open, into some kind of higher time frame inefficiency or sell side liquidity pool. That's what you're targeting. Okay, so down to the 5-minute chart. So on the 5-minute, I didn't put on the 15, but it's on the 5. So this orange area here, that is that 1 hour level. That's that 1 hour level there. That's our inversion level on the 1 hour chart. So like I said, when we see on the right side of the curve, or right side of, wherever that BISI would be, that bullish fair value gap, if it's not respected at all, we're looking at it to act as some kind of resistance or just as an inversion level. And then you can see that's actually even more refined here on the 5-minute chart, because you have the low of this candle, and then you have, the high, or it essentially seems pretty flat, the open of that down close candle. In between here, cut through the candles, you can see that price just doesn't get above 50% of the 1 hour in orange, and then it just hits the top of this inversion level. Okay, there. And as you can see here, it just is not going up from there. And then of course we are above midnight open, so we're looking to go short in here. We have our market structure shift right below this low. We have a fair value gap here. I know it's pretty tight in there, but really tiny little fair value gap, but you can see price goes back up into it, and then it just crumbles back down. You have another fair value gap in here, overshoots it, but of course we have that inversion level right there that I mentioned previously. All right, so obviously price just kind of tanks during the day, but typically with the power 3, you are using either the midnight open or 8:30, although 8:20 is the CME open. We use 8:30 as our opening price for the New York session. Okay, the next thing, which I'm not too sure that too many people use, I don't know what your schedule of the day is like, or maybe miss a move in the morning session. Maybe it's like FOMC, where we have our interest rate hike decision, and we have to wait till 2 o'clock, 2:30 to actually get into a trade, and we have to wait for the chop and all during the day. Okay, we want to avoid that, which that's what we have coming up next week. So you want to avoid the AM session. Just wait till 2:30, look for your trade. Not to say that you can't find a good trade, and sometimes it trades in a decent range and all that. Yeah. When Jerome Powell talks, you never know what the market's going to do. When we have these interest rate decisions, FOMC, it can do whatever it wants to. So just wait till 2:30. Okay. But like I said, we have midnight open, we have 8:30. The next time that you can use as a power 3 is 1:30 p.m. Okay, so 1:30, let's drop down to the 1 minute. So right here, what I have is I have 130. That's the opening price at 130, which is labeled in this dotted like pink line. And then I have separated the 2 o'clock, the 3 o'clock hour. Okay. So just like I said with the power 3, as we can see at 130, price rallies up. Okay, we take out liquidity, and according to power 3, using 130 as our start time, we should be thinking we're looking to go up, to go down, of course leading into the 2 to 3 o'clock silver bullet. All right, that 2 to 3 o'clock hour, price will typically do some kind of move in there that you can find. Now here clearly we see from this candle's low to this candle's high, we have a fair value gap at 130. We rally. All right, you don't have to close above to have a shift in market structure. That little tick that goes above that high, that is all you need, and it forms this swing high. That's all you need for a market structure shift. Granted, we have this here. At this point, you should already be thinking bullish. Granted, I personally wanted to wait to see this right here. I want to see this high taken. So we have that here. We have a retracement back into a fair value gap. And this is on the 1 minute chart, guys. So on the 1 minute chart, we have a retracement back into a fair value gap. And then we just rally higher. All right, into the 2 o'clock hour after 1:30, after the lunch session. So into the 2 o'clock hour, we take the lunch session liquidity. So that time between 12 to 1 o'clock or 1:30, more precisely, we take that out. We have a market structure shift here. Okay, like I said, we don't have to close below that low. We just have to take it out. And then you also have this swing low here that's taken. So what's left behind? A fair value gap. I'm sorry. We come up, trade into it, we break down lower. Next retracement, we have our order block here. Okay, again, look to the left. What do you also have? You have a fair value gap here, that supported price going up. We break through it. We look at that as an inversion. If you cut through the candles and look at how on top of the order block, we tap that inversion level, the order block, and then we crumble lower. All right, even on this retracement back up, inversion, order block, falls down. Okay, so looking at 130 as power 3, using the fair value gap as your PD array. All you need is one. You don't have to have ICT's 81 ways to get into a move. You need one PD array. You need an order block, a fair value gap, a breaker, mitigation block, projection block. It doesn't matter. You just need one. And the most prominent one that is easiest to find is the fair value gap. Okay. So again, 130, power 3. We want to see the market go up, they go down. Okay, now this also depends on what's happening in price, because also the market could go up just to come back down, take out that 130 stop, and then it could just rally up higher. But of course, what's happening in price, we're bullish today, and that is Thursday of last week. This is where I got the example for today. But 130, we rally up. We have a market structure shift. We have one below this swing low, and this swing low, fair value gap, breaks lower, little retracement, order block, inversion, fair value gap. Okay, goes lower, comes back up. Okay, and then of course we just, we fall right back through. We take out that 130 low. That is your initial target. If you get up in here, you should be expecting for at least the 130 opening price, or whatever swing low, swing high. Swing high was formed, you want to take that out. Minimum. Okay, now we trade into the daily fair value gap, or busy. And then of course this is another macro. I want to make a video about macros, but this is another macro that occurs around at 315 to 345. Of course, you see we consolidate around the high end of that fair value gap. We come down, we take out liquidity around here, we rally, and then into the 345 hour into close, we just rally on up into this fair value gap here. Okay, so I know that was kind of rushed. This is just a quick one. I'm going to have a part 2 of this that actually probably breaks down them even more. But fair value gaps are a simple concept to understand. It's a 3-candle pattern, and like I said, you're looking at the midpoint or the first quadrant for me as the most reactive areas of price to see what price is going to do. Or if we're bullish and we have a bearish fair value gap, are we going to close above that first quadrant, that 25% level going up? Or is it going to immediately reject us? Or we close above it, okay, cool. So that means that price should go higher to the 50%. Do we close above that? No. Okay, so we're definitely looking kind of bearish if we're looking for prices to go up in a bearish fair value gap. Do we close above that 50%? Cool. It looks like we could go higher, and at this point we're looking at that as an inversion level. Okay, especially on a daily chart. So going back here, going into next week, with that, we did close below the consequent encroachment of this fair value. I cannot say fair value gap tonight, guys. Okay, it's been a long night. So we close below here. So next week, I want to see, do we treat this as an inversion fair value gap? Okay, we do have a volume imbalance here. We have our order block here that we can look at. I want to see, does price move forward to fill in this entire gap here, move into this volume imbalance here, and then potentially we see what we get from there. But I want to see how we act here. I think that's it, guys. This was kind of a long rambled one. I really wanted to get more detail in it, but I kind of want to try to keep these videos a little bit shorter. I'll probably do a breakdown of the macros and Power 3 again, probably sometime next week. I think this one didn't do justice, didn't teach too much, but it was a good introduction. I just wanted to get some kind of introduction out, and I think that is it. So till next time, talk to you guys later.